The G20's financial advisor warns about the threat stablecoins pose to the powers that be. Search results for Bitcoin halving are off the charts, quite literally, and markets decide to rappel, not fall off a cliff, but rappel gracefully down a cliff wall. Today on Breaking Bitcoin.
This is Enzo from OKEX, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin. We are live every evening at 9 p.m. Central Standard Time, your evening source for everything markets and finance. I'm your host, Justin Wise, lead analyst and senior mentor at CrackingCrypotcurrency.com. Hopefully you guys are doing absolutely fantastic today. If you guys are looking to develop a verifiable systems approach to your trading strategy, join our community. Take advantage of our signals and trade setups, our premium indicator suite, pathways to profit, strategy building course, community mentoring, and much, much more. You can sign up today for our 7-day free trial at premium.crackingcryptocurrency.com. That is premium.crackingcryptocurrency.com. We have got so much to talk about. As I said, the FSB issuing a Watchdog report today. Not really a Watchdog report, more of a, oh my God, the world is falling down. We need to be concerned about stablecoins report today due to the G20 nations. It's definitely something we're going to be talking about. Bitcoin halving results, as we've said multiple times. And again, I got this term from Ansel Linder, who I've had on the show. Make sure to go check out the interview. He does Bitcoin and Markets. Great podcast to watch. This idea that the Bitcoin halving drives its own hype cycle, and we are far past, absolutely dwarfing the results of Bitcoin search results that we had, Bitcoin halving search results that we had back in 2016. Now, today in the foreign currency markets, the Australian dollar, which has been our sterling baby for the last week, has fallen down. It's a natural movement coming off of a blistering, almost 10 days for the Australian currency. But commodity currencies today, like the Aussie dollar, the New Zealand dollar, the Canadian dollar, they got pushed down today, while the dollar, the US dollar, gained in strength. And I feel that this is coming off a negative report from the International Energy Agency that really rained down oil prices today. The big short today was oil. Other commodities like copper being pushed down was also bad news for the Aussie dollar's currency, for the Aussie dollar as well, because it is a very, as I've said many times, the Australian economy is very export heavy. It is very dependent on its exports, particularly it's the value of the Aussie dollar is heavily influenced by metals prices and by oil prices, right? Now, more negative bank earnings continued to pile in today. And the sentiment on Wednesday seems to have been creeping more toward risk off than risk on. Global markets have taken largely across the board a tumble today. And with Bitcoin being no exceptions, with myself and the group catching this most recent leg down this evening for a short, we will be taking a look at the entire market tonight in preparation for our future plans, breaking that all down as well. But I see everybody in the chat. Hopefully you guys are all doing fantastic. I see a lot of good faces. We got Go7 Midwest Attempts, David Rice, Luke Jones, MT Coiner Midwest Attempts. I think I said that twice. Human from Earth. It's good to know. It's good to know. Human from Earth. Mr. Ether, Cavano Trades. MT Coiner, thank you so much for the $5 tip, my friend. He says, hope all is well. Bitcoin's big moment. This is what it was created for, right? Tuning in from the icy mountain tops. Thank you so much, my friend. We are going to see indeed. We've got challenged investor in the house. When Bitcoin falls off a ledge, call on Dr. Hedge. P-Flow. Good to see everybody in the chat. So let's get right to it. We've got a lot to talk about this evening. The first thing that I want to talk about is over in the live scene. Also, of course, if you're watching on YouTube, make sure to smash the like button, subscribe if you haven't already, and the bell icon will ensure that you never miss an episode. If you are tuning in from Twitch or DLive Nation, follows and subscriptions do help support the channel, and Instagram and Twitter is where you can catch custom content I guarantee will not see anywhere else, not even here on the YouTube channel. I know it's a heartbreak, but that is the way that it is. So over to the live scene. Let's go. All right. So the first story that I want to talk about tonight is this story from Mickey, and this is the Financial Watch. This actually really cost everything, but I like this article the best. The Financial Stability Board, the FSB. For those of you who don't know, it's an international body. It was formed in 2009, and it monitors and comments on matters that affect the global financial system. They advise G20 countries, including Argentina, Australia, Brazil, Canada, China, France, Germany, India, Indonesia, Italy, Japan, Mexico, South Korea, Russia, Saudi Arabia, South Africa, Turkey, the UK, the US, and the EU, of course, are the G20 nations. Well, it seems this organization is officially warning that the world's banking community about the threat supposedly posed by the growing popularity of, wait for it, stablecoins. LIBRA, you really kicked open a can of worms. Here's their official report, embargo not to be released. They refer to this report as a consultative document, right? Consultative document. This is the type, consultative is the type of word that the CIA uses before they assassinate somebody, and later describe themselves as coordinating the work of national financial authorities in regards to regulation and supervisory policymaking. Now, this was published on April 14th. This document reads like a crash course intended to bring central bankers up to speed on global stablecoins, or GSCs as they define it in this paper. This thing really actually does read like a central banker's manifesto. And what spans over 60 pages, they explain how they define GSCs and how they may differ from other crypto or digital assets. They do get into the potential risks that GSCs pose to the banking system, where existing regulations affect stablecoins, and where current supervision falls short in regards to oversight. It brings up the specific and unique challenges of stablecoins in a cross-border context, and how international cooperation is going to be required to keep stablecoins in check. Now, it does conclude, it delivers so-called high-level recommendations to the financial controllers, outlining an 11-point plan to bring stablecoin technology to heel. Now, while they do insist that policymakers should remain technology neutral and have an open mind when it comes to emerging technology, they do quickly start in with this document in making a case for why stablecoins do need the full suite of regulatory oversight rules that apply to assets in traditional finance. There was a lot of information I saw on Twitter. I believe it was the Moon who got himself in trouble with kind of and not just him. I'm sure there was other individuals as well. I saw this all over Twitter, but a lot of people saying that the FSB report is calling for a ban on stablecoins. It is not doing that. It is not calling for a ban on stablecoins. What it is, though, doing is we have to read between the lines here and see what this heavy-handed approach is going to mean for stablecoins and for the crypto community in general. Now, the FSB is concerned with the prospect of the widespread adoption of stablecoins, and they warn of an independent payment infrastructure potentially overwhelming the existing system. Now, according to them, regulatory issues could surface from the widespread adoption of global stablecoins, especially if they are decentralized. Now, in some newly emerging market economies, the document says that there is a greater concern about foreign currency pegged stablecoins potentially replacing fiat currencies, retail deposits, or safe assets. That means that they are concerned with economies. Actually, this is what's funny, right? Their concern is that the citizens of a country will adopt, this is what's so glaringly obvious here, their concern is that citizens will choose to adopt this decentralized stablecoin rather than the existing cartel of banking services offered by their local government. It's called the free market, right? This is the entire idea behind decentralization, that you should be free to choose the type of currency that you wish to use, that you should be free to choose the financial service that you wish to use, right? And I do not, of course, as somebody who advocates for free finance, I do not believe in this kind of mythos that they push out there, that this is all to protect the citizenry. Well, we have to do this because we have to keep our citizens safe. How can we guarantee the stability or the security or the legitimacy of these currencies that these individuals may choose? They might use foreign currency. Oh, no, they might use foreign currency. How dare they? Well, here's the answer, governments and central banks around the world. Make your products better. Make your system better. Utilize less seigniorage, right? Gain less seigniorage. Do less usury, right? Do less money printing. Build a more stable economy, right? Create something that is more convenient to the user, that is more decentralized, that is freer for the user to use, right? The fact that they are concerned with citizens around the world adopting a decentralized stablecoin speaks to the strength of the stablecoin in the first place, right? We are not out to build the safest system. We are out to build the freest system. Okay? Period. Now, among their concerns, there is a fear that the situation could exacerbate bank runs. Of course it could exacerbate bank runs, right? Therefore, the Stability Board report suggests local authorities in certain jurisdictions should be empowered with the ability to prohibit the use of GSCs. Not ban, but prohibit the use of GSCs, including the power to censor fully decentralized systems, right? Now that is going to require actual physical action, right? To actually censor networks. You're going to have to do a multitude of things, right? You're going to have to be trying to snatch IP addresses. You're going to have cooperation with local ISPs. You're going to have to triangulate the physical locations of individuals and potentially use the police. So this is really not easy to do, right? It's very, very difficult to attempt to shut off a decentralized system. Now, it's not impossible, right? It's not impossible. The full weight of a government entity potentially has the authority or the power they certainly can attempt to invest the resources necessary to find everybody in their providence that is utilizing the Bitcoin network, for example, and punish them, levy them with fines. And doing such a thing is going to slow adoption, is going to put the heels in adoption. But for example, look at what's occurred in China, right? China has, not necessarily banned Bitcoin, but they were kind of pseudo-banned Bitcoin. And then they went through these levels of like bringing it back and walking it back. And now it's actually legal commodities in there. Now it's actually somewhat of a legal commodity in China. And all throughout, Chinese citizens continue to use Bitcoin, right? So, what is that? I think it's Princess Leia from Star Wars, right? Tarkin, the more you clutch your fingers, the more star systems will, the more star systems will, I'm getting it wrong. The tighter you clutch, the more star systems will slip from your fingers, right? Yeah, that's how it goes. So anyways, now among the examples of stablecoins named in the report are, of course, Tether, USDT, which is described as being the leading cross-border stablecoin. Now, this is a rather... Stop. Somebody says, I can't read that fast, so I slow it down. Mr. Ether says, I can't read that slow. Stop it, man. Now, this is a rather long report, all right? This is a rather long report. It's a rather long report, but we will cut to the end where they lay out their recommendations for regulators concerning stablecoins, which in short are, I believe it's on page 60. That's on page 60, isn't it? Here we go. We'll cut to the end where they lay out their recommendations for nations and central banks around the world. So stablecoins should be comprehensively regulated and supervised, right? That means, again, they are saying that there needs to be, that these things can't just run around in the wild. We can't allow the free market and developers. We can't allow the users of a platform to develop their own financial system or currency system. No, it needs regulation. It needs us to tell them what to do to keep them safe. We need to tell them what, we need to protect them from themselves, right? We can't have somebody else stealing their money. We need to be stealing their money. Now, B, they should be regulated functionally and proportionally to their risks. That makes sense. It means that the more riskier or the more utilized a currency is, the more it should be regulated, or the more prioritized it should be in terms of regulation. I.e., that which is more of a threat to their existing cartel should be regulated first. They should be regulated and supervised by a cross-border and cross-sectoral jurisdiction. What that means in layman's terms is that this needs to be a meta-governmental body, very similar to the G20 nations, that actually can reach in and influence regulation or financial legislation between countries. So they are arguing for, they always push for this, right? All international bodies push for a one world government type approach, right? But that's what they're arguing for here. That they should have governance frameworks that are comprehensive and identify accountability. Now, that I certainly understand. And I think that some of the better systems do that. Now, they should have effective risk management framework in place. Again, we talked about the MakerDAO meltdown yesterday. I would say that is, again, that's an experimental system, but risk management should be firmly in place and they should have these backups. It's very difficult to plan for these things, and it is the errors that do push us forward. But again, I do agree with that. Should have robust systems for safeguarding, managing, and storing data. Yep, it's called the blockchain. Should have appropriate recovery and resolution plans. Well, we need to talk to BitMEX about that one. Should provide transparent information about functions, including any stabilization mechanism. Should provide legal clarity on the enforceability of redemption rights. I do agree with that one. It seems like nobody understands how Tether works. And should meet all regulatory, supervisory, and oversight requirements of any jurisdiction for operating, of any jurisdiction, right? So basically saying that if a global stablecoin is going to work, it has to meet the legislation and regulation of, and we have come to the end of all nations. And that's what's a little silly to me, is that, even fiat currencies don't necessarily do that. It's just the fiat currencies are accepted in multitudes of places because they are widely liquid and accepted across the world. So the primary takeaway from all of this is that they, the FSB and the G20 nations, seem to want cryptocurrency firms playing with stablecoin issuance to fall directly in line with their cookie cutter approach to regulating and governing banks and any other service provider in the traditional financial space. If we consider what this means, stablecoins with the LIBRA fiat backed token being one example of how the powers that be are very concerned at the prospects of a company or a giant corporation circulating currency in this fashion and muscling in on their existing racket, we could say. One of the popular examples cited in this report is that nations with weaker currencies could be very susceptible to a destabilization of their banking system if alternative stablecoin currencies are widely distributed and adopted by the population. And this is what really, in my opinion, I know that there is a litany of arguments to the backside, and I understand the litany to the backside. I came from the traditional world, right? Where, I was steeped in the idea that all this kind of banking and regulation is necessary, but it's not, right? It is anti-freedom. It is to promote a system of seigniorage. It is to promote a system of usury, and it's just a massive system of, well, this is how the system works, and this is how the system is, and this is the only system that we know, and so we need to propagate the system because that is what keeps us alive, and that is the kind of, in my opinion, short-sighted thinking that actually leads to death in the long term, right? It is the adventurer who goes out and founds the new civilization for their country, or for their clan or for their tribe or for their people, that allows their population to become more decentralized and less focused on a central and less susceptible to a central point of failure, right? If your family is only located in one area and that area gets hit with an earthquake and you all die, well, your family's gone. If your family branches out to multiple countries, well, it's very hard to take you down, right? This is why the human population needs, for the love of God, to branch out beyond this rock, right? Human life beyond Earth is, probably should be our biggest concern, because at any moment, we could screw this planet up, giant asteroid could come in, aliens come down with some laser guns and take us all out. And now where's the human race? We're gone. Might be the only conscious life form in the universe for all we know. Come on, man, we're too important. And the universe doesn't care. There's no grand master plan. It's up to us to get off this rock. Okay, so let's start working together, people. Bitcoin helps us do that. Now, the fact that they are concerned that they want to tell the population what currency to adopt, well, the population will naturally adopt the currency that provides them the least amount of friction, right? So again, my answer to central banks is not to regulate competition into the ground, because that's what they do. Regulation is bullying. Regulation is using governmental force to impose your will upon the free market. Make your product better. Beat them in the open marketplace, but they won't do that. They have this addiction to command and control type responses to things, so they will not make their product better. That's like a foreign concept to them, right? Try going down to your local bank and telling them to make your checking and savings account more convenient for you, right? Why? They have the power, right? This is the difference between, a manager at Walmart, right? Like if you drive up to a Walmart, like I understand this is COVID-19 right now, but if you drive up to a Walmart under normal conditions, right? Where does the manager park? All the way in the back. Why? Because he wants the spots closest to the entrance to be reserved for the customers, right? If you're a Walmart employee, where are you told to park as an employee when you come into work? Not in the front, in the back with the manager, right? Maybe around the back of the building, right? By the shipping docks. Now, when you go to the courthouse, where do you have to park? Maybe 2 blocks down with paid parking if you're lucky. Where do the courthouse employees park? In the nice reserved parking garage right next to the courthouse, reserved for government employees, right? The incentive for service is different there. Walmart, as a free marketplace, as a free market company, relies on keeping you, the consumer, and the customer happy and providing you service. Therefore, they set out the red carpet for you to come in and be a satisfied customer. Government has the monopoly on the use of force, meaning that they can just snap their fingers and kill you if they want to. That's an extreme example, but you get my point. They don't have to cater to you. They will not cater to you. They don't care about you. They're not there to protect you. They're there to utilize you. Now, all this adds up to stablecoins and the decentralized platforms they're operating on being in the crosshairs of regulators in the coming years. If that wasn't obvious already with everything we've covered in the form of CBDCs, central bank digital currencies, and there might be more cooperation between the different the central banks of the world moving forward to combat these new systems that they are now overly concerned with about. Now, in this article, Chief Business Officer over at Ampleforth, Richie Kwao, was quoted in this article describing the central bank's move against stablecoin providers as inevitable, saying, quote, large stablecoins that are centralized or tied to the financial system only work until they matter, right? End quote there. So think about that real quick, right? You know, these decentralized systems, in his opinion, only work, stablecoins specifically, only work really well until they matter, until they work really, really well and they become a threat. The FSB's recommendations are inevitable and could result in the future of the entire crypto ecosystem coming under the control of those who control these types of regulated fiat-backed assets as a matter of course. So in a future dictated to us by the FSB, by the G20 nations, crypto markets could see a decrease in liquidity, and the promise of economic interactions which are permissionless, anonymous, and frictionless may never come to be if the surveillance state gets its way. As a result, blockchain projects, well, you know, more specifically, not as a result, right? So certainly that is the long-term fear here, but that gives us kind of a more immediate concern for blockchain projects that are reliant on stablecoins, such as the MakerDAO Foundation, for instance, or other decentralized protocols or DeFi projects that are very popular right now. DeFi projects have become the new shining use case for the Ethereum ecosystem. And here we have some of their, you know, again, I'm not going to say that the entire Ethereum or DeFi ecosystem runs on stablecoins, but some certainly do. DAI is very important in the ecosystem of decentralized finance. And they will be in jeopardy if the policymakers adopt a much more authoritarian and heavy-handed approach against stablecoins and these decentralized money transmission networks. Now, again, very hard to shut down DAI, very hard to shut down, things like Paxos or Paxos is not a very good example. Very hard to shut down things like DAI. Very hard to shut down decentralized systems, like Kyber Network or Compound or Ray. These are decentralized. So it's, again, as I said, it's very difficult to shut these things down, but it's not hard, and you can certainly disincentivize people from utilizing the network. But again, potentially it'll be the Princess Leia situation, where the tighter the government grasps, the more star systems slip from their fingers. And this report does go on to show that it's not just necessarily crypto or Bitcoin that strikes fear into the central bankers' hearts. Even digital coins, which are tied to fiat and have the ability to transact quickly and trustlessly cross-border, are presenting right now a larger threat to their operations in the coming years for a power structure that's demonstrated an affinity for power grabs in recent weeks. So, of course, let me know your guys' thoughts and opinions in the YouTube section, in the YouTube comment section down below. Always appreciated. Let me know your guys' thoughts in the Discord as well. Now, our second story today, before we get into today's market analysis, is going to be on Bitcoin halving. So we are officially less than a month away from Bitcoin's third ever block reward halving. And the once every 4-year event usually sparks some excitement among those enchanted with its hard money, capped supply narrative. In fact, so excited like really excited with Bitcoin's narrative, right? I think it's suffice to say that certainly the halving sparks some excitement around these parts. Well, it seems that the sentiment indicators are pumping today after 2 of the top trending Bitcoin posts on social media were both pointing out that Google search's Bitcoin halving just saw a massive jump in 2020, saying that the numbers before were just predicted, but now they are official. So one of the top trending Bitcoin related tweets yesterday showed the Bitcoin halving searches on Google taking off. And this looks very similar to the 2017 chart. And then over on Reddit, the top trending post was also pointing to the sharp jump in Google stats on the search query of Bitcoin halving. Numbers not seen since the 2016 event and the associated hype that came with it. Now, we can see here, last week the data was merely estimated. The actual data shows worldwide interest in Bitcoin halving has significantly surpassed the interest that occurred during the week of the 2016 halving. Now, this reduction in the amount of Bitcoin paid out to miners on a daily basis is going to have a variety, which is the definition of the halving event, will have a variety of effects on the Bitcoin and cryptocurrency space. And we regularly discuss those expected effects here all the time on the show, such as the shakeout of smaller miners on the Bitcoin networks, sidelining certain miners and their equipment until profitability returns. We talk about how this changes the effect of miners, how they're selling or hoarding coins, depending on if they're a small miner going under or a big one riding out the halving profitability storm, and how this might affect the order books and our markets. But with supply and demand concepts being firmly understood by those curious in investing, coupled with a central bank on an unprecedented printing spree in recent weeks, the halving narrative arrives just in time and shouldn't be underestimated in how much interest will be garnered and gathered in Bitcoin over the coming weeks leading up to the event. Still, ongoing global demand for Bitcoin remains largely uncertain when it comes to the terms of buying, right? The economy is still in turmoil, there is a looming recession, and Main Street is quickly going unemployed. Demand for risky assets may actually be at a risk of declining. The March meltdown was certainly some proof of that. And now with many of the leading industry analysts calling for redips to test lower prices. However, the recovery in Bitcoin's price has since been promising. And together with the economic crisis currently unfolding, Bitcoin might be posed to capture the imagination of the people like it did in 2017. And the halving narrative may contain the magic necessary to draw in the interest of those curious about financial sovereignty. Back in 2016, the months leading up to Bitcoin's second ever halving, Google Trends showed a similar increase in searches for Bitcoin halving, but many are pointing to the scale of interest being much greater this time. Certainly, there is a much broader recognition and understanding of Bitcoin now. So to see the numbers surpass and move the same direction, while the halving is an initial shock to Bitcoin's economic model and the miners at its foundation, again, we do typically see a sell-off post-halving, they do hold their own significant bags of Bitcoin, along with the specialized equipment and warehouses that they poured time and money into setting up. Even the smaller guys taking a financial hit during a difficult period may be dedicated enough to not so easily walk away from the network. I doubt that they will. While many consider miners the most vulnerable participants in the Bitcoin ecosystem, others instead choose to think of them as the most invested. And if Bitcoin needs to be rescued or to be carried along for a while, it will likely be the miners, it will certainly be the miners that can be counted on to do that if any trouble rears its head post-halving. In other words, the miners can be trusted to do their job pre and post-halving because of their investment in the network And all we need to do is, all they are going to do is hope that investors take notice and get drawn in by the narrative, adding to the ranks of those interested in financial freedom and financial sovereignty again. So let me know what you guys think in the section down below. This is a contentious issue. Do you guys think that there is enough tinder in the tinder box to generate the flame that can see 2016 and what we went on to experience in 2017, particularly in the midst of what is going on with the economic environment on the global market side? Or is Bitcoin as a risky asset too tied to the traditional markets? And if they take a slump, it is going to take a large slump with them, leading us back down to the 3000s, potentially, maybe even lower. I doubt it, but potentially even lower as we move post-halving. Let me know in the comment section down below here on YouTube, guys. Thank you guys so much. That was our crypto currently segment. It's time to get into today's breaking Bitcoin market analysis. You know what we need? We just need a nice, slide through scene. Oh, we do have this one. It is. All right, so we're going to get into today's breaking Bitcoin market analysis. Let's get going. Yeah, I thought you guys might like that one. All right, taking a look. A lot to talk about. We'll start off with Bitcoin as we are wont to do. All right, Bitcoin on the daily time frames doing some interesting things. Bitcoin on the daily time frame is in channel of the daily baseline. We are at a very important crossroads, ladies and gentlemen. If we end up drifting a little bit lower than this, if we end up drifting lower, what is that number? What is that number? That number is going to be 65.65. Daily close below 65.65 is going to be sending us into a hedge. We're going to be hedging our Bitcoin. We're going to be prepared for a more dramatic drop to the downside. Yes, we certainly are. But that's not where we're at right now. What is the setup that we're looking at right now? Those who have been watching for a while, reversal, baseline bounce. Yes, swipe left for Bitcoin Moon, swipe right for put it all in Tether. Now, what do we have? Now, this is a fresh daily candle, but so far we do seem to have a doji candle, right? We have sold all the way down. What was the low of today's daily candle? We experienced a low of 64.64. As I said, today, earlier today, right at the daily close, I ended up taking, there was no daily signal for Bitcoin. There were a few daily signals in other markets that I took. I only took 2 crypto trades today, ended up taking 2 Forex trades today. Didn't do anything in CFDs or commodities, but we will actually be looking at our commods here. I might actually be putting on some trades live here for commodities in the CFD markets because they're reopened. But we are looking at a reversal baseline bounce setup right here. So this would be, speculating on Bitcoin to the long side, looking at an initial take profit of around, I believe 7,000 at this point in time, but let's take a gander. Halving right here, May 13th, according to Bitcoin block half. All right, so we'll just look at the daily baseline. Of course, the daily baseline is sitting at 65.6450. Let's just double check that, make sure we are correct. 65.6460 is where the baseline is sitting at. A close below this level, a close below channel, 65.64 to 64.74 is going to be putting us into a daily hedge. It's going to be hedging our position. So we're going to be utilizing either. So for those who are new, that means that the safest place to be is sitting in cash or tether. Alternatively, the safest place is to, and what I choose to do is I choose to hedge my Bitcoin long position that I hold in cold storage with about 1/3 margin on ByBit with a short futures contract, right? This is how I hedge my equity in BTC. So that will be occurring maybe tomorrow, maybe moving into Thursday. Depends on what the market decides to do. But right now, I would be looking at a reversal baseline bounce here on the daily, potentially on daily's close. Other individuals are going to be in this. This is a discretionary type of setup. This is very rare for the type of discretion that we do. We don't get these trades a lot, but when we do, this is the type of setup that we'd be looking for, right? And I do believe that we are somewhat in the environment to do them here. Parallax nearly oversold. Minx on the daily nearly oversold, not quite there yet. Now, let's be honest. Our momentum oscillators for a trending perspective are flipped to the downside. However, we're not below the baseline. We haven't flipped my breaking Bitcoin initiator short, and we don't have enough WADA negative delta coming in. We certainly do. We start to have it forming on yesterday's daily close and starting to form today. And we do have a rising explosion level with WADA explosion, meaning that the Bollinger Bands are separating, meaning that volatility is increasing in the marketplace. How could it not, though? Look at that. Look at this scam wickery over the last 5 days. And now finally getting our first, I would say, more pronounced movement, about a 3.67% movement from open to close on today's daily close. So anyways, that would be the trade that I would be looking for, as I'd be speculating to the upside here. This is kind of, and the reason why is because this is kind of like your last hurrah, right? You don't do a lot of risk with this trade. Your last hurrah to try to take price to the upside in the case that this is a pullback in a continuation trend. This is where you can get risky. Otherwise, you wait until the trend actually definitively resumes, and then you continue trading in the long direction. Right now, we're at a crossroads, right? So this is a very, very pivotal time to be safe. I wouldn't be putting on a lot of exposure when price is at a very critical moment because, come tomorrow's daily close, we're going to have a lot more information, right? Or come today's daily close, which will be closing, today for me is the evening of Wednesday. So this daily candle will close for me on Thursday evening, right? I know UTC time, CST time, it don't matter. So very important time to be relaxed, to be sitting on the sidelines, because tomorrow might be a day where we end up taking a lot of short exposure, right? And, like today, what did we end up doing today? The global markets did a pullback and we ended up taking a lot of profit. We've been riding the Australian dollar to the long side, ended up getting exit signals on many trades. So we ended up exiting a lot of traditional market trades. We were long on traditional markets. Price pulled back, gave an exit signal. So we were taking profits. Today was a huge profit taking day for the group. We took profits on our Dow trades. We took profits on our VIX trades, on our VIX shorts. We took profit on our Australian dollar trades. We took profit on our Kiwi dollar trades. We took profit on our CAD trades. A lot of profit taking in the group today, and taking some crypto exposure to the upside, and taking some, I would say, safe haven currency speculation to the upside, by actually shorting some pairs against the end. But and in terms of just traditional markets are a ways away from shorting, but Bitcoin has drifted down here and given us this opportunity to catch Bitcoin early in the case that it is an early signaler for overall market reversal. So that is what the daily is saying to me. We are at this crossroads. I think the trade prior to tomorrow's daily close is going to be speculating to the upside in the and overall, for the reason that we should be trading in the direction of the dominant trend, right? And this is a particular setup that we look for in the group, the reversal baseline bounce. Price pulls back to the baseline, we speculate a trade to the upside. So that's the trade on the table. If we end up closing below the baseline, then that trade will be invalidated, and the trade potentially might be on the table for a short. Just because we hedge does not necessarily mean we take an at-risk short, because hedging is by definition not risk. But it certainly is there to protect us. So we've had a very good run just in the month of April. I'm up about 15% on ROI so far. So just pulling that back and allowing myself to kind of reap the full rewards. Actually, about 13% in realized ROI and about 12% in unrealized ROI so far this month. So it's been a very good month for the group. So far, we're already about halfway through the month. We are halfway through the month. So it's been really good. And now my main goal, of course, as always, is preserving the capital that I've made, preserving the USD that I've made, preserving the BTC that I've made, reallocating my portfolio, and waiting for this next market dip. I think if we end up taking another, pretty pronounced dip from here, If we end up taking another pronounced dip from here, I think that will be my first discretionary reentry back into traditional markets, my first kind of re-add into my dividend portfolios that I really started establishing back in 2011. Yeah. All right, so with Bitcoin on the daily analyze, let's take a look at the 4-hour time frame. 4-hour time frame has flipped negative for us. We saw the 4-hour flip positive over here. Didn't give us a whole lot of follow through. And again, Watchdog largely kept us out of that. There was not a single candle where we traded above the dead zone. The 4-hour flipped negative on the continuation filter here from Watchdog explosion actually gave us a WADA above the dead zone here. And volatility actually confirmed on this candle right here. So right here, you would have gotten your first 4-hour short on the previous 4-hour close, and actually hitting a take profit target on that. Yeah, on that trade already. So the previous 4-hour close, first take profit would have been about 64.97. You would have grabbed that. You would have gotten that beautifully on that wick to the downside. Price has pulled back. Maybe your trade's closed, but you're cool. But not a whole lot of data here on the 4-hour time frame. Minx is oversold, but we have not recovered from that oversold condition yet. Ooh, something that we should check is, I don't believe that it is, but let's just see if bottom feeder is giving a signal. No, the last bottom feeder signal that we got was over here, calling the Bitcoin bottom. And yes, for you haters out there, that is a red candle. Told you to buy right there. Ooh, sorry, guys. It's getting a little late for me. Anyways, moving on over into the 15-minute chart here. So 15-minute chart. So I ended up, for my day trades, I ended up actually taking a loss on this movement to the downside here. Stayed flat for this movement here today. And then actually ended up shorting prior to the daily candle close just a little bit. So catching this last leg, my last take profit was 65.50 on that short. So I am now flat and just spot long still on Bitcoin. My positions was closed. That was just a 15-minute short. And of course, Minx was confirming that short we broke past and rejected from yesterday's point of control. And we started breaking down below the point of control back here from the 13th, where we were actually finding support. And we have now swept that previous low. Previously, I was targeting this violent rejection at 65.50, which is a VPSV trade setup that I look for and talk about quite a bit. And actually, if one would have taken this violent rejection long, they would have had a winning trade. They would have had a winning trade on the 30-minute chart. This is the 15-minute chart. But for those of you who guys are in the group, make sure you watch the VPSV trading seminar where I go over the VPSV trading strategy. That's a violent rejection type setup trade, a type C trade. The 3 types of VPSV trades are point of control, single print, and violent rejection. And where are we at today? We are just consolidating here at today's point of control in the 15-minute chart, right? We have a current daily low of 64.64. We haven't seen any kind of double bottom. This is a pretty violent sweep. So I'm not actually expecting this to be taken out anytime soon. I could see price coming down. I would like to see price come down and tag 65.50 and consolidate underneath before reclaiming 66.21 and then pushing up higher. 67.20 and 66.80 are the 2 levels that we need to get over. This is kind of our current intraday resistance level that we formed. This is our previous breakdown point. So we do want to be very careful when price comes up and tags this level right here. This is previous support. We would expect it to turn into resistance. We would want to be very careful about price moving up. We would want to be very, very cautious about taking the breakout trade out of this level. The reason why is because this is the natural area for price to retreat to and test to retreat and test the previous day's point of control before continuing further down in its trending pattern. And if we do reclaim, we want to see, again, strong candle closes. We talk about trading horizontal support and resistance a lot. We do want to see a strong candle close above that level before we actually look to buy pullbacks from that level or actually buy the breakout itself. So be very cautious. If you're going to speculate on taking Bitcoin to the upside, I would be setting bids around 65.50 or in between that area, or on the actual confirmed breakout of the 67.80, 67.20, 66.80, 67.20 region, taking price to the upside. And if that were to occur, then my take profit, my intraday take profit would be up here at 68.80, 68.88, which is the previous untapped point of control that we have yet to backpedal and retest to the upside. So fairly simple here on the 15-minute. The VOS predictive oscillator that we wrote is doing very well, signaling for the long right here, signaling for the short right here. Catching this movement. Hasn't actually pulled you out of the long yet, so having a little discretion with your profit taking here is very helpful. And again, just a very good intraday trading indicator right here, giving you very, very good entries. Potentially, I think one strategy that might work well with the VOS, one that we're actually working on designing for our day trading suite, is going to be utilizing the chandelier stops in conjunction with that. So an aggressive trailing stop loss when VOS signals for a trade entry. And we'll be actually publishing that here fairly soon. We've got a lot of work to do on the code base, but this stuff does take time. So I'm running, some of the stuff that I'm running is an alpha. Of course, Renko for Bitcoin is still negative, has not flipped positive yet. Ethereum in a very similar boat, but Ethereum is nowhere near a reversal baseline bounce yet. We're going to need a tag all the way down to 138.26, which is where the current baseline is resting at. Other than that, Minx is signaling for a short on today's candle. Parallax is bearish, and Watchdog Explosion hasn't actually flipped bearish yet. On the 4-hour time frame, Ethereum is just now coming off of, very similar to Bitcoin, its first 4-hour short signal on the previous 4-hour close. And on the lower time frames for Ethereum. Yeah, we came down to the single print, came down and swept the previous violent rejection. This actually does look pretty good for an intraday long. Potentially looking for, slightly lower entries like 151.24 would be optimum to set bids. And then looking for that recovery over 155.07 would be pretty good for a push potentially up to 161.53 on Ethereum. On Ethereum's Renko has been fairly choppy. Looking at the broader market, the ES futures are struggling quite a bit after a pretty significant sell-off today, as are the NASDAQ, the Dow, and the Russell futures, so not a lot there. Obviously, VIX spiked heavily today, causing me to exit my SVXY trade. Good thing, too, couldn't have happened at a better time. I've been long in the SVXY since here, and I ended up taking my first take profit on this candle right here, which was good. I actually gapped through my take profit, so I got filled it open, and then it pulled back, giving me the exit signal. So this is also a potential island reversal right here where we gap up and gap back down. So potentially we could, potentially one trade that I might be looking for is a long on, VIX. I think VIX actually might be spiking, which could be correlated to a more recent market downturn. Euro's been very volatile to trade on the lower time frames. Big sell off, big pop up today, and then kind of selling off as we move into the evening hours. Gold spot is consolidating to the downside. I actually am pretty certain here that gold is going to break to the downside here. Just look at this consolidation pattern on the lower time frames. This is a symmetrical triangle after coming off of a violent rejection. I expect to see lower prices on ZAG moving in as when I wake up. Probably on silver as well, but my silver trade is a daily time frame trade. It's in a no loss situation, so I'll be managing my silver trade later on. As I said, we're going to take a look at some commodities here in a little bit. Looking at how the traditional markets actually ended up closing. The SPY just pulled back to the continuation filter. Not too bad there. Putting on an inside bar, inside doji on the NASDAQ and gapping down similar as well. Potentially, I'm not going to lie, looking at the Dow and looking at the SPY, these are island reversal setups on the daily time frame, which means we gap up and gap back down. And that is often That is a particular chart pattern that I watch for in traditional markets. Now, I would like to see the confirmation for me by closing below the continuation filter, and I might actually be shorting traditional markets tomorrow. I might be a little aggressive on this one. I'll be watching. I'll let you guys know. We can see a gold spot on the daily pulling back, putting in that same kind of low volatility doji. Same on silver spot as well. Brent crude, I mean, having a large move to the downside. Large move to the downside today, while Treasury bonds, T-notes, continue to rise, actually breaking past resistance on today's daily candle. Moving to our foreign currencies. As I said, looking at the Australian pairs, we did see commodity currencies like the Australian dollar, the Kiwi, and the CAD take a slump today. We can see the Aussie yen pulling back, giving the exit signal. The Aussie Kiwi staying stable. The Aussie CAD pulling back, giving the exit signal. The Aussie dollar pulling back. The Canadian Swissy continuing to sell off here. The CAD yen continuing to sell off. The Swissy yen is on my watch list for a short, but not in it yet. The Euro Aussie actually reversing now back up to the upside, as are a lot of the Euro pairs. The Euro CAD, the Euro Swissy. I'm actually short on the Euro Swissy, excuse me. The Euro Kiwi pushing back up. The Euro Pound consolidating. No trade on the table for the Euro Pound. The Euro Yen continuing to sell off. I am short on the Euro Yen. The Euro Dollar is actually potentially going to be signaling for a short on today's daily candle. I'm going to be putting that one on my watch list. The Pound Kiwi continuing to push to the upside. And I didn't go long on this one, although this was a valid continuation trade, but I just have too much exposure. But certainly one to watch. We'll be putting that one on the watch list as well. The Pound Canadian pushing to the upside. Again, not long. Don't really have any long exposure on the pound except against the pound dollar. The pound Swissy is going to be signaling for an exit today. The pound yen as well signaling for exits. The pound dollar, which I am in, is now signaling for an exit, which it didn't yesterday. The pound reversing against the Aussie. The Kiwi reversing to the downside against the dollar and the CAD and the Swissy and the yen. The dollar being strong against the I always say the Canada. I like that. The Canada. The dollar strong against the CAD tonight as well. The dollar strong against the Swissy. This one's actually on my watch list for a continuation long. The dollar strong against the yen, although I am short on this pair, so this is not actually a positive movement for me, but it's okay. The Australian, we're going back to the Australian dollar, weak against the Swissy, and the dollar weak against the won. I actually exited this trade as well in a small loss earlier today. So overall, foreign currencies, a lot of volatility, very exciting to trade, continuing to experience a lot of success in foreign currency market trading. All right. Now, I do want to look at the commodities on my watch list before I go to bed. Watching palladium for a continuation long. All right, now, not that the CFD markets are back open. Looking at corn here, let's see if we did actually get a... corn is not a short for me. Corn's not a short for me. But soybeans are. And I'm really glad that I waited for the markets to reopen because now I'm going to get such a better entry on them. And wheat is also a short for me as well. So I'm going to call these for the group, and then following today's stream, I'll actually log onto my Awanda account and take them myself. All right, so let's look at these. We'll be utilizing Quadriga ATR to measure our stop and target system for this. We want to take a look at ATR and see if there is any inconsistencies over the last 15 bars, and there's not, so it's fine for us to use current value of ATR. And this is a fresh bar, so we will use yesterday's ATR value, which is going to be 0.147. All right, so we're going to be going short on the soybean CFD here. Now, there are ETFs for Americans out there. For the Americans out there who want to get soybean exposure, there are commodity ETFs. So we can actually, like SOYB is one for that. You can trade that on Webull. Got my phone somewhere around here. Oh, I know where it is. Sorry. Soybean USD. I'll be utilizing 1% risk on this. On a Wanda. And take profit 1 is going to be 8.289. No take profit 2, no take profit 3. My stop loss I'm going to set at 8.6545. All right. Put that on my actively traded list. And wheat. All right, we've closed below the initiator, below the... We need to wait for wheat because we did not have the rising explosion level signal, and this is a fresh candle, so we actually need to wait for today's daily close to go short on wheat. Until then, it actually stays on the watch list. Same for palladium. I am interested in going long on palladium, but we need to cross and close above the continuation filter, and we're not there yet. Other things on my watch list are the Swiss yen for a short, but no rising explosion level, and this is... excuse me. Let's get my baseline up here. It is a fresh baseline cross under, so this matters. And we can see how the baseline prevented us from getting trapped in engine BTC, which was on my watch list in the other day. You know, MT Coiner, I absolutely feel you, man. There's nothing more than I would love to have tunes on in the background, but every time I turn them on, man, somebody complains about it. Which I get, man. You know, there's, you know, we do attract a pretty niche audience of people who are serious traders, who really want to learn, who want to make real money, who want to trade very professionally and consistently with rules-based logic and build systems and understand and test and back test and understand risk and all, trade like a pro, be a professional. Unlike some of these YouTube channels where it's like, fuck yeah, man, let's go long, bro, let's go, man. It's like, man, traders don't, I mean, listen, certainly listen, when I was younger, I mean, I've certainly been a reckless trader in the past, but it's not how you sustainably, consistently trade. Right? Cowboys don't make it a long time. But so I get, every time we turn music on, people are like, hey man, it's really hard for me to concentrate. You're talking about lots of things and I'm trying to soak in the knowledge and learn. And I can't do that if you got music playing. So, it does. I would like to get some of the team members on here to bounce ideas off of me because can't be me all the time. All right, so what do you guys think? You guys looking at any trades, any trade setups? Be happy to look at them. I'll be looking at your questions here in just a little bit. But tonight we have gone over the crypto markets, Forex, ETFs, contracts for difference. Just something we don't often do. The commodities. Anybody gonna slow me, break my stride? Oh, I got to keep on moving. We could do Tyler Z just surpassed me in the competition. Oh my God. Let's check it out. That makes me happy. You know, this is my, I mean, broadly, this is my demo account, right? So this is the account I'm testing my bot on. So this is really good to see. Like Roy Coin holding that 100% profit. This gentleman, I'm not actually quite sure he is. I feel like he's running 2 accounts, but he's got 2 accounts up. Maybe it's actually, I don't know why. I think they just signed up with an email. So this could be just crypto something, right? 2 completely different people, most likely. Mr. Hutt, Payday. Let's see. Tyler, breaking back. Oh, breaking past me. Don't kill me. Oh, what's that song I heard earlier today? I'll kill you guys. B-Flow saying, please stop. Come on, man. You don't like these soft, smooth lyrics? I wanna be the very best, like no one ever was. Dun, 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 dun. To mine them is my real test. To spend them is my cause. Bitcoin. Gotta cash 'em. Blockchain so true. Oh, we're buffering now. Thank you so much, YouTube. I start singing a Pokemon Bitcoin crossover, and clearly the audience has spoken. They don't like that. Maybe if I didn't broadcast at 60 frames per second. Let's see, what are you guys getting? Analytics. Let me know if you guys are getting some bad buffering. Yeah, man, you gotta love some Pokemon, dude. I really enjoyed Pokemon. Zuhair says, since the continuation filter isn't published yet, what would I recommend as an initiation signal? I mean, definitely start with the Minx primary signals. Parallax generates good signals. Wadatar Explosion generates good signals. The Ichimoku indicator that I've published produces great signals. In fact, just as you know, I don't trade the Ichimoku system anymore, but I have some of the students in the class in the group do. And a Trunker, for example, he's a junior analyst and he trades the Ichimoku system with a few other indicators. And he was, I mean, he's been on a total win streak. And yeah, the Ichimoku generates good signals. What I was going to say is I was back testing it the other day just for funsies, and even with all signals enabled on many, many time frames, it was a very high hit rate. Let's see here. The Fisher Transform, the Fisher Zero Cross is a fantastic one. Marshall, who is a great contributor and member of the team, he was, he found an EMA cross, which is a fairly simple indicator that generated a high hit rate. And then the next thing to do after that, and I just covered this. I mean, there are hours of videos on this. In the latest mentoring session, I talked about backtesting initiators, and my recommendation is, if you're not satisfied, or if you want to kind of build a more extensive spreadsheet following that, my recommendation is to go to TradingView and just start searching indicators and just start objectively testing the signals. Obviously, the walkthrough and the documentation on how to actually do the backtesting is in the Pathways to Profit course. Listed out, and we provide all the spreadsheets and the documents for doing your back testing and tracking your results and logging all your data. And my thoughts on the Bitcoin monthly setup. I haven't really looked at it. Let's take a gander. I'm not a big monthly time frame trader. let's just go over here and go to BTC USD on Bitstamp. Listen, don't get mad at me. I was not using, listen, I promise, I know what you're thinking. Wasn't using the Fibonacci for anything. I'm going to get nothing but hate. You do nothing but talk bad about the Fibonacci. Right, yes, because it's terrible. All right, so what I will say is this. If I were to just look at the monthly chart before I apply any indicators to the chart, you know, the following fractals stand out to me, okay? And, you know, I guess the question here is, so we can see, I mean, just this slow trudge down on the monthly, and whenever this happens, you know, it doesn't really stop, you know, it doesn't really stop. Let's see, here it stopped by a period of sideways consolidation for about half a year almost, and then a strong candle close to the upside. Here it's followed by consolidation for 4 months, and then a climb to the upside. And I don't think that we've seen that 4 months of consolidation if the fractal were to repeat itself, right? So that's the first thing I'll point out here on the monthly time frame, but you can certainly see the descending, tightening volatility and contraction. So the question here is, though, is this last monthly candle that we had, this candle right here, and this candle right here, and now we're going to see that 4 months of sideways consolidation before upside movement? Or is this candle right here more like this candle right here and this candle right here? In this case, we had 4 months of sideways consolidation, listing lazily to the downside, 1 month of upside, and then 3 months of giving it back, and then we fell off the cliff. And here we just had, let's see here, following this candle, we had like 2 months of, you know, 1 month of moving up, 1 month of giving it back, and then we fell off the cliff. Something interesting to talk about. Now, in the realm of indicators, I don't really use the breaking Bitcoin indicator on the monthly time frame. So let's look at the rest of our indicators. Obviously, Minx has flipped short on, or Parallax has flipped short on the monthly time frame. Interestingly enough, Voss is still bullish on the monthly time frame, which is interesting, but I think that's actually scaled for, yeah, that's fine. Finding support on the monthly 55. This is kind of a tough monthly chart to read, I'm not going to lie. You know, I don't apply my technical indicators in the same way. My technical indicators are designed to be objective signalers. They're not designed to read the tea leaves of future direction. Sig formation. Sig formation is very good. Thank you, Dixie. I'm gonna get distracted if I look through these. I got a lot more questions coming in. Well, here's what I'll do. Let's layer the monthly onto my weekly analysis. All right, this looks a little healthier. All right, so looking at the monthly chart on the weekly time frame, I mean, large sell-off right back down to our support at the point of control at 6,600. So overall, I mean, just looking at the monthly, I have to revert to my broader analysis, which is not using technical indicators to kind of predict the broader trend. You know, I just generally on the higher time frames, on the monthly and the weekly. On the monthly and the weekly, if but to be very careful here, if we're talking about objective signals looking for trade setups, which is how I trade, and if we're doing price predictions, right, which everybody tunes in to see, everybody wants to hear, and when I'm in a trade that goes to the upside, I'm predicting price to the upside. When I'm in a trade to the downside, I'm predicting price to the downside. But I don't really make a habit of doing long-term price predictions when I don't have a strong fundamental bias. You know, I covered that in my fundamentals in the news section, right? And it's very unclear here if Bitcoin is going to break and detether now, or if the broader economy is going to fall down and drag it with it. I don't know yet. That's why I'm waiting to see. As I said, I'm going to be aggressively shorting markets come tomorrow if they end up giving the signal that I'm watching for, potentially. And Bitcoin is right on the verge of me wanting to short on the daily time frame. If that occurs, we could see $1,000 or larger swing to the downside, which at this current point in time would be okay. As long as we are consolidating within the yellow box territory right here at Bitcoin's fair market value at the point of control, I think this is fine. If on the monthly or if on the weekly we lose 6,600 significantly, like if we drift back down to 6,000 and we close below it, then I'm pretty concerned that we are actually going to revisit the lows here, because we'll fall underneath the value area. And usually when that happens, we rebound up pretty quickly. But every time we do that, it's on a pretty big candle. Now, having said that, if we go back in recent history, there's really only one time in Bitcoin's history where we've gotten a massive sell candle this significant, followed by a second sell candle, right, with a doji in between. And that's coming off of the 2017 highs. We're really not coming off highs right now. We're coming off lower highs. High, lower high, lower high on monthly time frames. And I think that's probably the most significant thing to watch on the monthly, whether we're layering it on the monthly or whether we're laying it on the weekly, is seeing overall how price responds and seeing how Bitcoin is responding on these time frames to what the broader markets are doing. Andy Ram says, yo, I didn't know you could sing all the time, baby. Thank you very much, guys. Tyler Z, MT Coiner, B-Flow, thank you guys. Highly appreciated. Sounds like you are the Pokemon Midwest. You got caught, homie. Dang. Thank you, David Rice. Highly appreciated. Bob the Builder, American Hodl. MT Coiner says, chart hex, LOL, that stupid coin made me like 9x in and out. I don't think, I can't even remember what that link for hex is off the top of my head, but good work, man. Robert says, any thoughts on the ADX DI? So the positive directional index and the negative directional index, I find it works great with trend following. I mean, that's a really popular indicator, and certainly not terrible. I focus more on the actual, so that's the DMI aspect. I actually focus on the ADX itself, which is the average, the average directional index. And I like to measure volatility with that if you make it less sensitive on the daily time frame. I cover that in my volatility filter tutorial. And while it's not my favorite, it certainly is a classic, and it certainly is better than nothing on your chart. Now, again, I'm not downplaying your utilization of it. It's a classic, right? And it just depends on, how you're utilizing it and what signal you're watching it for. The Watanachi? The Watanochi. Robin says that, or thinks that since it's the biggest candle by far, I guess we are consolidating and rising. Similar to the other two events. I mean, it's certainly an important, I don't know if it's important, but it's an interesting formation to point out. Midwest says, you do not have to be gifted to trade professionally. You just need to work hard and be disciplined like anything else. That is true, my friend. Agency says, Bitcoin hasn't been through a recession. Direction depends on whether Bitcoin will fare well given the economic downturn and monetary policies. I agree with that. Yeah, to retrace all that and get a lower low. Yeah. Yeah, I mean, certainly, you know, I have seen an exodus out of BitMEX agency. I've certainly seen an exodus out of BitMEX. And for good reason. You know, I think that a lot of people really are kind of fed up with BitMEX, right? And it's just one of those things where it's like, you know, you guys don't offer the best product on town anymore, right? That's why I trade on ByBit. I've thought that BitMEX offers a less valuable product for a long time, especially with ByBit adding USDT now. I mean, why? I would not trade on BitMEX. I mean, that's not true. I do trade on BitMEX, but I mean, what I mean is their perpetual contract, trusting it as my primary exchange, right? I do trade altcoin contracts there, largely because I'm comfortable with it, but I've switched over to trading Bitcoin, which is pretty much what I trade anyways. It's the only thing I day trade. And it's the main cryptocurrency that I trade swing-wise. And Meso. I don't do that on BitMEX. So certainly a lot of, and maybe I'm too critical on them, maybe I'm too harsh, but certainly a lot of faith in them has been lost. Is it not called Hex BTC if it's on ByDesk? Well, yeah, if it's on, okay, so I mean, we can go to ByDesk. Oh, we changed the, oh, here it is. Okay. Come on now. I just want to change the time zone, time frame. You gonna let me do that, or? Sup, bro? Sup, bro? I don't like you eyeballing me. Okay, listen. This certainly shouldn't be that hard. Is it just me? Well, today Hex has done a squiggly line formation. Oh, I do like how their drawing tool is far more fluid. Here, I'm not gonna lie, I do like that. I'm like so depressed to be looking at this crap coin. And I give up. I don't deserve this. I deserve better than that. I deserve this. That's what I deserve. All right, guys. Listen, I'm getting a little tired. It's time to roll out. I think you guys are too. So thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis with your host, Justin Wise. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comment section down below, and I'll do my best to get back to you in the next 24 to 48 hours. Make sure to smash the like button here on YouTube for the YouTube algorithm. Subscribe to the channel if you have not already, and hit the notification bell. Otherwise, you're not going to get notified when we go live. It's just not going to happen. YouTube has moved away from the subscription model, and if you do not have that bell icon on, you're not going to get notified. So bang that bell, ladies and gentlemen. If you're on DLive or Twitch, consider following us and subscribing to support the channel. And Twitter and Instagram is where you can follow us to catch exclusive content you won't catch anywhere else. We are pretty active on the other socials as well. Check us out on TradingView, for example, for our free published scripts. There are links in the description down there below for everything you could possibly want. 2 free stocks on Webull when you sign up, $90 margin bonus on ByBit, free stuff for Crypto Tag, free stuff for Ledger Nanos, and all the other stuff. If you guys are beginning your trading journey, make sure to sign up and join the community at premium.crackingcryptocurrency.com. Try our 7-day free trial and enjoy our premium indicator suite, our premium signals and trade setups, our community mentoring, and much more. Check us out at premium.crackingcryptocurrency.com. If you guys are feeling awesome, then continue feeling awesome. Trade safely, and I will see you guys tomorrow evening. Look forward to talking to you guys in the Discord.